First of all, just to echo what Chancellor said about the UK itself, our message is clearly stay the course. And there are two reasons for that. We've always been consistent in the message, but I'd say that today there are particularly acute dangers of appearing to waver or appearing to hesitate or appearing to lose a little bit of nerve because you had a quarter or two of disappointing results. And there's a premium on consistency, there's a premium on coherence, and there's a premium on the direction in which you want to go. So steering in that direction and then staying there. Now, adjustments have to be made. They're made all the time. Chancellor just told us about some of the adjustments they're making in real time as we speak on the taxes, on job creation, on facilitating the creation of companies, on financing the infrastructure, things that were not there and that appear to be necessary then given the circumstances that can actually underpin the recovery beyond the question of having solid public finances. So I'd say the risk-reward ratio between, trying to follow the temptation of kind of spending your way out or getting that 0.5% extra or whatever, vis-a-vis getting, giving the wrong message and then paying a very hefty price for it. I think very clearly that, staying the course is perhaps the better way. In terms of the world economy at large, I would add to the analysis that Christine so aptly put before you, the fact that there are other systemic dangers. Of course, unemployment is at record highs in many of our constituencies. In the particular case of the OECD, I can tell you, of course, you know the story in the OECD, but it's an 8% average, which hides the story of 8.2 in the United States, bumping up from 8.1, where they were already there, and then 11% in some, in Europe, in the Euro area, and growing. So it's still destroying jobs, still not stabilized still. So it's quite a challenge. But then within those numbers, which are bad enough, okay, youth unemployment, double, treble, quadruple, 5 times, 30, 40, 50% of the youth without the jobs. And then add inequality, documented as growing in practically every single one of our countries in the OECD. So put the three together, slow growth, high unemployment, especially of the youth, and then add inequality, and what you get is these explosions all over the place and the danger of a whole generation of frustrated young men and women. Now, so that's something that we, of course, should not allow, and hopefully we will not allow it to happen. But Christine was saying, okay, well, is there a better way? Is there a way? What we believe, we always say, go structural, go social, and go green. We have run out of some of the traditional tools. The monetary policy, we have very low interest rates. We run out of the fiscal policy. Everybody's actually trying to reduce the deficits, reduce the accumulated debt, which grew by more than 30 basis points or 30 points of GDP on average in the last few years, in the crisis years. So what do you do? Well, we found that perhaps some of the best short-term policies is to go structural, which typically we associate with the long-term issues. And we found out also that the results in the short term are much better, that you don't have to wait for so long in order to get the benefit of the structural policies, that if you go education and innovation, and if you go competition and liberalization of the labor markets and liberalization of the product markets and R&D and taxes and infrastructure and health, etc. And if you explain well, you communicate well, you translate well, and you say where you want to go and how you're going to get there, you will succeed. You'll get a credibility bonus, and that can help you with a short-term phenomena. We're saying go social because there's still 14 million people without jobs added to the ones that were in the unemployment before the crisis. Of course, not only are they unemployed, they're long-term unemployed in many cases. They're young mostly, but now this phenomenon of long-term unemployment which we hadn't seen before. And we're saying go green because we are on a collision course with nature now, and we believe that by correcting the course, we can also create business opportunities. One last thought. Christine mentioned Mario Draghi today. He told us, he says, Mario told us enough about Europe. Well, let me just say, and I'm sorry he's not here, he said, the ECB is ready to do, he said, whatever it takes to preserve the euro. But he said one phrase before that. He said, within the mandate. And the question is, are we satisfied that the European institutions which we created to serve the European countries and serve the people in Europe, are they doing what it takes in order to get us out of the hole? And if we act within the mandate, then the question is, can we interpret the mandate in a way which would allow the necessary flexibility so that the muscle that the ECB showed, for example, when they injected a trillion euros to stabilize the interbank market in Europe, and it worked, it worked like magic, it just did, And can that be done? There's a balance sheet, there's a space in the balance sheet in there to use it to bring down those yields and stabilize the sovereign side. So, and we say, okay, today I said, well, was he suggesting that maybe they should say change the mandate? I said, I don't want to guess what he was trying to say, but frankly, first we should explore every single flexibility that the mandate may have, and perhaps if we find it too rigid, well, who knows? But I'd say that we are facing a situation where we are not fully using the instruments at our disposal, thus a rather unsatisfactory outcome, at least so far. Thank you.